You are watching Market Watch, the brief overview of the key events from the world of finance. The administration of President Donald Trump is placing increased attention on the yield of 10-year U.S. Treasury bonds, signaling growing sensitivity to market constraints that could hinder the president's economic plans and ease pressure on the Federal Reserve. The 10-year bond yield, which influences borrowing costs for mortgages, business loans, and government expenditures, has risen by more than 0.75 percentage points despite the Fed's 1 percentage point cut in short-term rates since September. Treasury Secretary Scott Bessent noted that when the president speaks about lowering interest rates, he is referring specifically to the 10-year bond yield rather than the short-term rates set by the Fed. Meanwhile, U.S. companies are rushing to file merger and acquisition notifications with antitrust authorities before new regulations take effect on February 7, 2025. These new rules will significantly expand the amount of information required for regulatory approval, potentially tripling the average workload and increasing compliance costs. Companies are eager to avoid additional expenses and take advantage of long-standing procedures that have been in place for over 40 years. The updated regulations aim to modernize merger requirements by addressing the growing number of private equity deals and providing regulators with more comprehensive data to expedite approvals. In the oil market, global prices are showing a downward trend following data indicating a rise in U.S. crude inventories. According to the Energy Information Administration, U.S. stockpiles increased by 4.2 million barrels over the past week, surpassing analysts' expectations. This development is putting pressure on oil prices despite concerns over geopolitical tensions in the Middle East. Additionally, rising U.S. production is offsetting potential supply cuts from OPEC+. Traders are also closely watching signals from the Federal Reserve, as its policies could impact energy demand. Now, turning to the crypto market. In January 2025, the Chicago Mercantile Exchange, the largest derivatives exchange in the U.S., recorded an all-time high in cryptocurrency trading volumes, reaching $285 million. This surge was driven by increased activity in Bitcoin futures and options trading. Meanwhile, Ether futures trading volume declined. Overall, cryptocurrency derivatives trading volumes on major exchanges fell by 19% in January. Analysts expect further growth in derivatives trading to be supported by the introduction of Bitcoin ETF options. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.